Let's talk about the BOJ. Yes, there's a lot of whippy price action in the Treasury market. In the Japanese government bond market, they don't want any of that. They're trying to cap a 10-year yield at 0.25%. In the meantime, what's developed over the last month is a massive move, gap higher, in dollar-yen. What do you think gives there? How do you read that current situation?
It's absolutely fascinating. It's not often that a major central bank wants to swim against the current. That's what developing country central banks try to do once in a while, and they learn quickly. So the Bank of Japan is trying. The Bank of Japan is trying to remain ultra loose at a time when the other major central banks are starting to tighten. So what happens? You said it. The currency weakens to levels that we have not seen for a very long time. Now, the first phase of currency weakenings is welcomed. It's welcome for two reasons. It enhances competitiveness and it reduces the risk of deflation. So I suspect the Japanese welcomed that first phase. But this month, it became somewhat disorderly. So I suspect they are more worried. And Japan's trading competitors should be more worried. So it's not going to be as easy. I think ultimately, the Bank of Japan is going to have no choice but to follow the other central banks.
That final point you made, no choice but to follow the other central banks. Let's say they wait, and they have a problem. Mohamed, a final question for me is whether that is just their problem or our problem. You touched on it briefly there, the trade relationship. Do you think it is just their problem, or is this our problem? And if it is, why?
So it's mainly their problem. Japan is not as important to world trade as it used to be. So this is not the 80s. This is not where you get the currency accords, plaza, etc. So it will be an irritation in terms of the international system, but it's not going to be a massive problem. John, the one thing we've got to get our mindset above is this notion of little fires everywhere. You're going to see little fires in developing countries, in Japan, here, there. And it's important to realize that's the sort of world we live in right now, is that little fires are going to erupt all over the world because we're going through these major changes and we don't have the policy flexibility that we normally would need to navigate this in an orderly fashion.
From a macro perspective, Mohamed, do you miss being away from a trading desk in a moment like this one?
So I actually feel sorry for people having to trade through this volatility. What I do miss is being surrounded by really smart people at PIMCO to discuss these various things, because I think this is a very fascinating and interesting time where lots of things are moving, and trying to focus on the 3 or 4 that are most important is really hard.